Right now, something huge is happening, kind of behind the curtain of global finance. It looks like China is making a massive play to completely rewrite the rules of money for the entire world.
Yeah, that's really the heart of it. For a while now, China's been making these moves, doing something we really haven't seen in modern times. They're trying to tie a major currency directly back to physical gold. Right, so the big questions are, how are they actually pulling this off? And why now? What's the trigger? Well, that's exactly the story we're going to unpack, and it all kicks off with one single, really powerful idea.
It all boils down to one word: trust. For decades, the entire global financial system was built on trusting the US dollar, right? Countries would park their wealth in US Treasury bonds because everyone agreed they were the safest thing you could possibly own. But then, something happened. Something big.
And this number, this is the reason why. $300 billion.
So back in 2022, the US made a move. They froze Russia's dollar reserves. Now, putting all the politics aside for a second, this action sent an absolute shockwave around the world. It was proof that if your country's nest egg is sitting in dollars, it might not really be yours. It can literally be switched off with the click of a button.
And that's the question that leaders in every other country immediately started asking themselves. And just like that, the trust that had been the glue holding the dollar system together, it started to crack. And that loss of trust, it kicked off a massive, massive change in how countries were acting.
Okay, so what happened next is absolutely crucial, and this chart just lays it out perfectly. Look at this. You can see central banks, especially in countries we call emerging markets, they started dumping their US Treasuries, that's the bar going down, and they started buying up physical gold like there was no tomorrow. I mean, at a record-breaking pace. That's the bar shooting way up. So dollars are going down, and actual physical gold, it's going way, way up.
And this brings us to the next really big piece of the puzzle. See, China isn't just buying gold. They're using this exact moment of distrust to build a whole new parallel financial system, one that's specifically designed to work completely outside of the US dollar's influence.
And they have a really clear three-pronged strategy to do it. First up, China's central bank went on a buying spree, becoming the #1 public buyer of gold on Earth. Second, they built up the Shanghai Gold Exchange, or the SGE, which is now the largest market for physical gold in the world. And third, and this is fascinating, they're creating something they call the Gold Corridor.
Now, this gold corridor idea is pretty brilliant because it's designed to solve that core problem of trust we were just talking about. It's basically a network of gold vaults that are located in different countries. So let's say you're Brazil or you're South Africa. You don't have to ship all your precious gold over to Beijing. No way. You get to hold it yourself in your own region in a vault that's just linked up to China's system. The physical gold is decentralized, which is key.
Okay, but piling up tons of gold and building all these vaults, that's really only half the story. The real game changer, the thing that could make this whole plan work, is a super quiet but incredibly important regulatory shift happening inside the global banking system. You could almost call it a secret weapon, one that could unlock gold's true financial power.
All right, let's get into this a bit, because it's important. For decades, under the old banking rules, gold was considered a Tier 3 asset. What that means is, if a bank was holding, say, $1 billion worth of gold, they could only recognize half of it, $500 million, on their books. But then, new rules came in and upgraded gold to Tier 1. Suddenly, that same $1 billion in gold counts for the full billion, just like cash. That's a big deal. But the truly revolutionary step, the one that changes everything, is making gold an HQLA.
So what on earth is an HQLA? Well, it stands for high-quality liquid asset. The easiest way to think about these is as the absolute rock-solid foundation of the entire financial system. Right now, that exclusive club is pretty much just US Treasuries. They're the collateral, the backing for all the massive, constant short-term lending that basically keeps the global economy from grinding to a halt. It really is the plumbing of the whole system.
And here's why that matters so much. If gold gets that HQLA status, it transforms from just being a shiny, heavy rock sitting in a vault to being an active financial instrument. It means countries could use their gold reserves as collateral. They could borrow against it, they could lend against it, they could use it to fund enormous infrastructure projects, and here's the kicker, all without ever needing to use a single US dollar.
So what all this does is set the stage for a totally new era. We're not just looking at one single dominant financial system anymore. What we're actually seeing is the rise of two completely different, competing ideas for what the future of money should even look like.
So on one side, you have this model being pushed by China and the BRICS nations. Its foundation is physical gold. Trust comes from thousands of years of history and the fact that it's scarce. Then, on the other side, you have the model of the US and the West. Its foundation is more about digital technology. Trust here comes from complex math and the energy used to secure the network.
And this is the really critical takeaway. We might be moving away from a world with just one main global reserve currency to what some people are calling a multi-monetary world. A world where different systems, backed by different ideas of money, actually have to compete with each other. It's a world of choice.
Which really leaves us with this final massive question. Are we looking at the start of a new kind of Cold War, but this time for money? A battle for dominance between these two huge competing systems? Or are we actually witnessing the dawn of a new era of choice? An era where this very competition could finally make money better for all of us.